We know there's a big world out there, free from boundaries and constraints. It's connected, yet separated by distance. It has the instinct to adapt, evolve, to thrive. There's a big market out there. Embrace it with ActivTrades.
Welcome to Tip TV Finance, where we are joined by my co-host Mike Ingram, a strategist at BGC Partners, and somebody making his debut on Tip TV, George Batrouni, who's a market analyst at ActivTrades. How are you today, George?
I'm good. How are you?
I'm very well. I'm dying to know how you can explain the madness of the markets, i.e. the relationship between price and news.
Yeah, exactly. Sometimes things are pretty much straightforward. You see good data coming out of the market, and you see the market moving accordingly. Lately, the movements of the market and the decisions of policymakers have been a bit different, or even confusing for investors, because what we might analyze or interpret as let's say positive or negative to some markets, or to reactions of markets, we're seeing the other way around. For example, we can talk about the Bank of England and the data coming out of England. Recently, news have been in the market, at least in terms of numbers, positive for the UK. Inflation numbers have been improving. Pretty soon we're gonna pretty much reach the target level of the Bank of England. When you see all that, you would say, Mark Carney is gonna obviously say pretty soon we'll be maybe hiking rates to go along with the increasing inflation. He's not doing that. Why is that? It's just because of the
£1 million a year, I think, is the reason why he's not doing that.
No, I think he's not doing that. It's just because of the Brexit. So the Brexit decision is causing so much instability, also no clarity over the markets, that he's expecting bad times coming, even though today, when you look at how things are going, you would say, he's got all the reasons to be talking about.
No, but that's, it would be very nice if we lived in a world like that. But clearly, what Carney is working on is that he's looking at the economic argument, the political argument, are two different things. Exactly. Let's say he's a Remainer and he expects Brexit to be bad for the economy. Therefore, he won't raise interest rates. But also, he's basically a political appointee, not an economic one. And therefore, he's just, his mandate is not to raise interest rates ever. And so he'll have a problem when inflation goes up, and he still can't raise interest rates.
Well, the thing, Theresa May is also a Remainer. Let's not forget that.
Yeah.
She was a Remainer. She does not believe that a Brexit will cause big economic issues. Let's hope she's right for the sake of all of us. But what I'm saying is that at the end of the day, the Bank of England, if there wasn't a decision to go for a Brexit, even now maybe it's looking like a hard Brexit, the talk would be different, the rationale would be different.
Do you think that the broader issue, though, is that central banks have basically lost an awful lot of credibility? They've cried wolf on rates year after year after year. We've had year before last, we was dot plot said 3, we ended up with 1. Last year, dot plot said 2, we ended up with 1. This year, dot plot says 3. Market's pricing 1 and a bit. Mark Carney, Bank of England cut rates August last year, effectively pre-committed to cutting rates again by the end of 2016. By the end of 2016, I was surprised. Sterling, which had already devalued for months by then, was causing an inflationary impact. Wow, who could not have worked that out with my back-of-the-envelope economic model? And now, there has been some backup in rate expectations of it, because nobody's talking about a further rate cut in the UK anymore. But they're only pricing in maybe a 30% chance of a rate hike this year. That relative to what's actually going on in the ground in terms of, as you say, the growth numbers and the incoming inflation numbers, that seems a little bit relaxed, but it's within the context of a bond market, which, although it's been badly shaken, I showed a slide earlier on, it still could go a lot further, particularly if you expect a certain amount of economic dislocation in and around what's going on in Washington?
When we come to talk about central banks, I think we should look at the broader picture and don't forget history. I do not agree mainly that they are losing credibility because looking at the for last decade, I think they are the ones that kept things going from Yellen to Draghi. Let's also not forget Europe. It was his talk, like, we will do everything that is necessary to keep things going in Europe. His words really calmed the markets. So yes, obviously no one can get numbers always right. No one can expect everything. But at the same time, their calm and their wiseness, I think, in the past few years have helped weather the crisis of the politicians, the problems of the politicians. I think our main issues today are, a lot of populism, a lot of talk without real focus on the real issues and on the economic problems.
But haven't you just mentioned? That's the issue of what I was trying to find earlier in the interview. The central banks are increasingly, or have been, taking a political role, and that's the problem. That's why you can't understand the markets, because inflation goes up to 2%, and that's economically the time when interest rates should be raised. But because it's been decided politically that they're not allowed or they shouldn't raise rates, therefore they don't. So the whole thing doesn't add up. Even if inflation went up to 3% now, I guarantee you Carney would not raise interest rates. Come up with some other excuse. He said we'd raise interest rates when unemployment went below 7%. All these promises, because his political mandate is not to raise interest rates to keep the housing market going up.
Yes, but I was saying it from the beginning. You cannot separate politics and economics. That's the thing. It's sometimes, yes, the numbers say do that, but maybe increasing the interest rates would create a bigger problem on the housing market, ending up seeing crisis similar to what we saw in the US in 2008. So it's a fine line. It's a fine line for these guys, and I think their job is even harder now than politicians who only need. Sometimes you listen to them; they want to please their base. They want to please the voters without having a real responsibility of the results of what might happen. When they take certain decisions.
Well, if anybody does feel sorry for politicians or economists, please write in, and or even central bankers, please write in and let us know, because I'm sure there's a lot of sympathy out there. George Batrouni, market analyst for ActivTrades, thank you very much for coming in today.
Thank you very much for having me.
We know there's a big world out there, free from boundaries and constraints. It's connected, yet separated by distance. It has the instinct to adapt, evolve, to thrive. There's a big market out there. Embrace it with ActivTrades.